Hello there, traders. Hopefully you can all hear me today. So I'm going to double check the settings again, make sure that everything is all good. It's saying that everything's all good. So hopefully this time you can hear me and there's no delay in the stream today. Let me know if you can. That would be brilliant. So let me know if you can hear me. Hey, Karim. Jacob, who is EuroCAD long? I said, not me yet. It's not waiting for the daily close really before getting involved in anything. I was having a little look at CAD yen. Obviously yesterday we had the interest rate decision in Canada, so it wasn't really looking to trade around that event, but was waiting to see what the outcome of that event was going to be. Thank you, Karen. Thanks for letting me know. Brilliant. And this was the zone that we were kind of looking at, this little zone in here for a potential continuation of the downside move. Would love to see this daily close bearish like this. You know, if we do see that, I think then there could be a good possibility of price continuing to sort of trend back to the downside here. So this is a market I am particularly interested in. Why am I interested in that? Well, we were having a look at the currency strength and weakness of the markets on Tuesday, and if we take a look at CAD yen, which is just through here, there was a potential for either a reversal or a continuation. Reason why is because if we just look at the currency strength meter here, if I just go to and bring this a little bit bigger on your screen, you can see that the CAD is at -5. So this is a currency that is weak, but is in a potential reversal position. So essentially, as long as it doesn't show me any kind of breaks of new highs or anything like that, I'm assuming that the price is still going to remain bearish at this point. We don't have any other indicators to suggest that it's going to turn, like there's no COT report data on it or anything like that. So happy with that one. Japanese yen, one of the stronger currencies at the moment, or the strongest currency according to my currency strength meter at the minute, and is at the high 7. So again, this is a very bullish market in terms of a bullish yen, but the only thing that's going to kind of press this a little bit lower is the bond market, and we're going to take a look at that in a little bit, because bonds have been taking a bashing because of the recent data out of the US. But I quite like the idea of being bearish this market. We talked about this on Tuesday. This was the resistance zone I was looking at between sort of 107 and 108, and I'm looking to try and target down at the 105s, but I'm not naive to think that we could find some support down towards these swing lows. We've found them already at this kind of demand zone where price rallied recently. But this was the impact of the BOC interest rate decision and then cutting interest rates. So initially we had a bit of a drop to the downside, then CAD rallied off the back of that information, and then since then we just kind of continued to climb. But we can see that prices have failed to make any kind of new highs here in terms of significant closes above that high. That to me is a potential sign that the market is not willing to push past those types of levels. So that's something I'm taking into consideration. If you look at the 4-hour chart on the recent close as well, have a really nice sort of bearish close with price closing quite aggressively towards the low, breaking a previous low as well. So everything for me is kind of pointing in the direction where I'd typically like to see this go. You know, if I'm looking at an hourly chart, that nice break of trend line there was a nice move. Perhaps even the break and close below here as well. But ultimately, if we get a nice little play in terms of the market kind of moving lower, pulling back, lower highs, lower lows, that's a good start there for CAD yen. But ultimately, I want the daily close. I want this to be a daily bearish close off of this resistance zone. That's what I'm kind of looking for here today. Good afternoon, Vincent. What are you waiting to enter then? I'm waiting for the daily bearish close. If we get the daily bearish close off that resistance level, there's a sign for me that the market could be continuing to the downside. What I would look for then is the next day, right? So pretend you fast forwarded into the next day. If price has started to pull back, I'd be looking for breakouts on that hourly pullback for continuations to the downside. That's what I would be looking for here. So everything's kind of shaping up for me to be a good move. But like I said, I need the market to close. We've only just, well, we haven't even had the US Open yet. So whether it will finish like this, I don't know. One thing that did concern me with the Japanese yen, if we go take a look at the bond market in the US, there's actually a strong correlation between bonds and yen. Let me just go to the futures market. Now, bonds have been falling. Now, if I actually just grab the Japanese yen and compare the Japanese yen to bonds in the US, that is, we can see that they follow a very similar path. And that can be due to multiple reasons. It can be due to sort of safe havens and things like that as well. I like the idea of being a buyer of bonds because, honestly, everyone's selling bonds at the moment. Bonds have continued to drive lower recently because the market is pricing in a cut by the Fed next week. And usually when we're in a cutting cycle, the market will sell bonds, right? If we're in a sort of hiking cycle, the market will be sort of bullish bonds essentially, or bullish yields at least. But the market at the moment starting to fall a little bit there. I like the idea of being a buyer of the bonds because of what's going on in the commitment to trader reports. So I'm looking to see if this kind of starts to create the higher low that we've been talking about in a while. This little move, if it does start to do something like that, then I think the yields will start to fall. If we just go take a look at the yields, because yields are approaching some very significant levels at the moment. 30-year yields at the minute, gapping up to 4.5%. 10-year yields up towards the 4.3%. Short end of the curve up at 4.2% as well. So this is the pre-market. So yeah, I'm looking to see if we do start to see any kind of declines to the bond yields. I think if we do, then that's the sort of move where I'm looking for sort of US dollar lower and whatnot. But dollars remain fairly strong at the minute, and just got to be a little bit cautious with some moves that we're looking at right now. But let's get into some data. And we'll go have a little look at what's going on. Let me grab a pen tool and we'll go from there. Again, apologies, guys. I've got a little bit of a cold at the moment, so hopefully it doesn't distract you too much. Give me 2 seconds, guys. Just getting up markets made clear, so we can have a look at some potential seasonal patterns if we get a chance to have a little look at them. What's the day today? It's the 12th today, isn't it? There's a couple of seasonal patterns to be keeping our eyes on coming up very shortly, so we'll have a little look at those. Well, bonds typically react the inverse to interest rates. Usually if interest rates rise, you usually see the bond fall, and the yields will rise, which is kind of doesn't make sense right now, because usually when interest rates fall, the bonds rise, and we've got this different narrative at the minute, where you've got interest rates that are coming down in the US, but the bonds are coming down as well. But there is usually an inverse relationship to interest rates and bonds. But I was looking at some of the COT reports on some bond markets and looking at how hedge funds are positioning themselves on those. And usually you can look at the bond market for what future pricing is. So because you have like the 10-year bond, for instance, usually that's kind of the pricing that's seen in 10 years time. So they're expecting rates to kind of essentially rise, because usually when bond yields are higher, there's an expectation that interest rates will move higher as well. So a good little chart for you to have a little look at, for you to display this yourselves. If you go onto your TradingView chart, which there might be some murmurs of us using in the future, but I'll just leave that with you. I know you've been asking me for a very long time, and I got told something last week, but I'll keep it like that for now. Right, so if you go to US interest rate, okay, and we want to click on economy, and we click on this one, right? Let me get rid of a moving average. That doesn't need to be on there, and the stochastic. And then what we can add to this chart, if we go to compare, you can add the US 2-year yields, right? So if I just put that on the same price scale for now, typically when the US 2-year rallies, or bond yields in general, when they rally, that means the bond is falling. It means expectations are that we are going to see a rate hike, which is kind of not where we're at right now. Basically, the market's pricing in the fact that the Fed could hike interest rates. Not necessarily hike them aggressively, but at least hold them at higher levels. There's a couple of reasons why that could be. You've got CPI that came out yesterday that has pretty much remained neutral or the same, so there's been no change there. Essentially, what does that mean? That means CPI is sticky, right? CPI is sticky, so the Fed might have to leave rates higher for longer. However, if you look at the December pricing, we'll go take a look at the CME Fed Watch Tool in a minute, but if we look at the CME Fed Watch Tool, CME Fed Watch Tool is giving around about an 85% chance of a rate cut next week, okay, despite kind of CPI staying higher. Now, if you look at the bond yields, they're obviously making a little bit of a move higher after breaking lows recently, and they're pushing higher. Now, usually you would look at bond yields, right? Positive equals US dollar positive, right? The main reason behind that is because when they're purchasing the bond, the yield is higher, so it invites more foreign capital, and basically people will exchange their foreign capital into the US dollar, okay? So that's why the dollar will appreciate in those times. So I was anticipating the bond yields to continue to sort of drive lower, which is bonds higher, which is dollar lower. But that hasn't happened yet. Probably will happen at some point, but a clock is twice 2 times a day, isn't it? So we're not seeing that right now. Yields are rising, dollar's staying fairly bullish at the moment. If you look across the board, dollar's still up against Kiwi this week, Aussie, CAD, Euro, Pound. Pound it's struggled with a little bit. Pound it's struggled against a little bit. But other than that, it's still up. Now, what kind of causes the bond yields to kind of fall usually, or what we usually see when the bond yields start to fall, is we usually see the interest rates being cut, and we are in a cutting cycle right now. But it's whether the Fed can bring these rates down low enough to where it's considered neutral. That's the kind of talk that's around at the moment. Can the Fed bring the interest rates down to neutral? Now, because Donald Trump's coming in and his policies are deemed inflationary, the bond yields are staying higher, which is then obviously supporting the US dollar as well. So the seasonal play that I've been looking at as well, with terms of US dollar lower, sort of euro higher, for instance, that hasn't started to come into effect just yet, but doesn't usually come into effect until the 18th of December anyway. So I'm waiting for that kind of day, or around that date, to get involved with that. But yeah, essentially what you want to do, if you're looking to see how the market is kind of pricing in dollars at the moment, or what you expect from the US dollar, you can also then add US dollar futures index. We'll put that on a new price scale. So that's the purple line, right? Let me actually take off the can't take off the interest rate, can I? Because we're on the interest rate. Yeah, essentially when interest rates go higher, what happens to the US dollar? It usually appreciates. When the cutting comes into play, we usually see a depreciation of the US dollar. So the market's in this very weird place at the moment. I don't think it knows what it wants to price in right now. So it's just kind of remaining fairly range bound. But yeah, usually when you start to see yields rise, US dollar will rise. Yields have been fairly flat recently, so the US dollar has been fairly flat. Here you can see yields rise, dollar rallies, yields fall, dollar falls. You know, here was a very low period for bond yields because interest rates were sticking. But yeah, as soon as we started to see really some kind of big changes there, and we started to see them kind of move higher, we had this big advance in the US dollar futures contract. So yeah, I was looking to see bond yields fall, but that hasn't happened yet. Whether it will happen either, we don't know. But that's kind of where I was looking at things. If we go take a look at the US dollar index right now, we are still being supported. Market did try and break down a little bit. I'd still liked dollar longs, but I wanted to be long down towards this area here, down towards the 105s. Just put that scale back down towards the 105. That's where I was expecting dollars come into, and then continue to try and trade back to the upside. But at the moment, it looks like we're kind of breaking this minor high. It looks like we're pushing a little bit higher. But do I want to be a buyer of the US dollar just yet? Probably not. If price continues to break through these areas here, you know, something like that, then yeah, because you've got all this kind of roadmap for price to continue to drive higher. At that point, hi guy, hope you're doing well. But yeah, there's a couple of markets that we're just kind of waiting on, to be honest. You know, if I bring in the currency strength meter, you know, dollar pairs are not necessarily on my books. The only one that I thought could rally this week was the pound US dollar. But that market's kind of remained pretty neutral as well. Have a little look at cable prices. Well, starting to even break lower at the moment. But I did quite like the idea of being a buyer of this market. But there was just, for one, prices below the 50-day moving average, which I don't typically like to be a buyer of. If that's the case, or if it is, we have to understand where the market is in terms of conditions, right? Now, what is the market condition? Well, technically it's in a bearish trend, right? Because we were in a bullish one here, market was making higher high, higher lows, broke into lows on the weekly chart, prices moving lower, right? Now we've come back into the 50 weekly moving average. We've kind of rejected that on the one side. So, I mean, this could open up for a bit of a move to the downside here. Whereas if we look at the daily chart, I have to have like 4 or 5 in a row to really be a buyer. You know, the only areas I thought about buying was down here, but I think there's better markets to probably trade than these. Don't get me wrong. I think this week, if I was buying pound and it was here, taking out these kind of areas, that would have made sense, because you had this nice rally up. That is buyers stepping in. You can see that every time price came into this point, buyers stepped in until now. So that would have been my only way to kind of trade this market, really, would be to look at that demand zone and look for price to kind of rebound off that demand. But yeah, this isn't quite set up yet. That's why I've been focusing on other pairs. So Aussie yen, quite like the idea of being a seller of Aussie yen. We'll go take a look at Aussie yen. We come up into this resistance zone. Again, this was just something we were kind of talking about on Tuesday. I wanted to see price a little bit higher. I think it was into this kind of area here instead. Let me go back to the daily chart. Very similar to CAD yen, to be honest, where we had this kind of pause in the market. Price has hit that. We've rejected. So if we can get this close lower on Aussie yen, I feel like this is a market that I want to try and focus on. So Aussie yen, CAD yen are the markets that I really want to look at right now. Now we've kind of hit those key areas of resistance from the daily chart. That's where I want to focus. I think Aussie yen down towards the 95s would be pretty nice. So we need to wait on that. Aussie Kiwi was one I quite like for downside as well, but we're just ripped higher at the moment. But again, we're at this kind of resistance point. If it closes lower than that, that could be a move to the downside. I quite like the change in central bank policies at the moment between New Zealand and the RBA. RBA have really stuck to their guns. They haven't even, they're not really focused on cutting rates until early next year, whereas the New Zealand central bank have been cutting rates for a while. So there's going to be a turning point for that, and I think we're going to see a point where economics or the economy in New Zealand is going to start doing pretty well because they've been cutting interest rates, and then you've got the lack of stimulus from the RBA, which is going to hurt going forward, because they're literally the only reason they're doing pretty well at the moment is because of the ridiculous amount of government spending. So that's something to also take into consideration. But I quite like moves on Aussie Kiwi as well, so I'll be keeping an eye on this market too. Have I entered any trades recently? Yes, last week I was buying euro US dollar. So I bought where was it last week? What's the date last week? Between the 2nd and the 6th. Over here. Oh, here we go. Yeah. So we had this cross of the moving averages. I ended up buying on this break here, and I took profit at this high because I take profits at previous swing highs. And I knew the condition of the market was this is in a downward trend. This could just be a pullback phase. So we ended up doing that. I also bought Kiwi dollar in the same sort of area as well, which was over in here somewhere. But since then, the markets can, we changed over of the moving averages. So, although I did quite like Kiwi dollar to the upside because of the COT reports after this breakout here, it failed to kind of really make any grounds above that previous daily swing high. So not traded this short because the COT reports are basically telling me that this move could be at an end very shortly. Same with euro. So I'm not kind of looking for the downside moves on these markets, which, looking at that now is probably a stupid decision, but those aren't markets I'm really in. Another market I traded recently was pound yen to the downside through here. This downward move in here. Haven't traded this pullback phase because, again, I want to be a buyer of the Japanese yen, so I was looking for areas to buy it. One area I liked, very similar to Aussie yen and CAD yen, was that kind of pause area, but unlike those other markets, pound yen broke through that zone, and if we go look at the 4-hour time frame, there was no real significant breakdown. Even if you look at the hourly, you had this nice little move in there. That typically would have been a potential sell signal for me, but I didn't take it, and a good job I didn't, because yen rips higher. But I did like pound yen. But also, again, you have to think of your risk reward ratio. And I always say to myself, where's the safest stop? You know, where am I really, really wrong about this market moving to the downside? And for me, it's up here. Okay, so sometimes I won't take a position like here, because I'll be like, well, if my safe stop loss is all the way up there and my target is here, do I really have a strong risk reward profile? And am I really going to be willing to put my stop loss that far away from price? No. So, you know, sometimes that looks way better, even from a daily chart point of view. If you look at, let's say, theoretically getting short there, stop loss here, target down here, that's a okay risk reward ratio, 1.6. If I was trying to do it from there, it's like negative. So the closer I can try and get to that swing high, I'll try and get to that swing high. Whether it gets there or not is a different question. Market's going to do what the market's going to do. But pound yen not really on my currency strength meter this week, because I'm neutral on it. Euro CAD, I actually saw a question of who is long Euro CAD. Euro CAD is bullish on the currency strength meter. I like Euro CAD longs. I need to see that all this data get out of the way. But it started to pull back a bit further. We talked on Tuesday about potentially looking at this area here on the hourly, but price never, no, it didn't do anything. We had the higher close, which was good, but that was, I'm pretty sure that was around the, when was the Bank of Canada interest rate decision? Wednesday. There was a decision on Tuesday, wasn't there? No? Okay, so it was yesterday. And having a little look at that, so that was here. Yeah, so I think trying to buy or trade CAD around the Bank of Canada is just not a sensible thing to do. So if you were trying to buy that, well, there's no break of anything. The support, but yeah, I don't think there's anything there really. Let's have a look at a 15-minute time frame. Okay, so the 15-minute time frame made a new high. I think what we were looking at that point was, I remember this now because we were talking about it breaking into new highs. What I was looking for was like a pin candle or something to reject here to then kind of move on. You didn't get that. Market just continued to fold away. So although this is on my list to be a buyer of, and I like where we're at, we've come back into previous highs now. Maybe this is the turning point. You know, I'll see how the daily closes. If we get a bullish daily close, then I'll see how it reacts going into the next day, see if there's any kind of trend being broken or anything like that. You know, essentially what I'm trying to do is catch these turning points. What are the characteristics of these turning points? Well, you're bearish. Market creates a bullish close and also breaks the previous candlestick high. If you look at the hourly chart there, that's probably this break here, right? Market then starts to break higher. So I'd be looking at sort of, you know, either your demand zones, so nice little consolidation down there, potential opportunities, or I'd be looking at breaks back above the 50 or breaks of a trend line sort of resistance or any kind of trading pattern around those points. But yeah, essentially that would have been where the market started to kick on again in the primary phase. Whether that happens here, we'll have to wait and see, because that looks like it's forming a bit of an inside candle. Stochastic's still technically bullish here, being above the 80. So I'll be watching that one closely going in towards the end of the week. Might be next week where that starts to kick off a little bit. I think the dollar is very overbought. Yeah, I mean, look at that weekly chart. You know, I liked the idea of seeing this weakness coming in because what we typically see this time of year, but yeah, I don't think the dollar's the market where we're going to gain a lot of advantage right now. And I've said this multiple times. I've said what I've tried to say is, you know, I like the idea of buying euro. I like the idea of buying the New Zealand dollar, but is it the dollar that we're going to get the most value from? That's why I also kind of implement currency strength and weakness, so that I can try and look at where best to place ourselves. So think about euro this week. One market that was doing particularly well at one point was Euro Oz, right? It's a bit toppy because it's at this area of resistance, but on Monday it came into support here and then rallied to the upside. Now, if you look at that on an hourly chart, if I was looking at it on an hourly chart, you know, how could you have possibly traded that move? Well, there's like a little consolidation area in there, like a little double bottom that price broke out of, but ultimately you could have bought above the 50, put your stop loss below the low, try and target that swing high. Don't know how risk reward would be on that. But here's like Monday US Open, probably could have gone a little bit lower and maybe looked at sort of that little breakout move in there. Sorry guys, my nose is streaming. So that would have been a nice move. But look at price now. What's going on now? It's come back into that daily sort of low that formed, right? Here. And it's come back into it, starting to reject it. So look at that move. Very similar. I think if price starts to break these highs here, that could be a good market to have a little look at. Let's look at the 15-minute. Yeah, look, price has like slowed into here and is now consolidating. Break above there could be a good market to have a little look at going forward. So we'll just keep an eye on that one. Maybe I'll put a we'll put an alert here. See if price can break and close above this little cluster of highs. That'd be nice. You thought about EuroCAD, you're already in for buys. Nice. Look, I think if you get the sort of move, I mean that's a news candle, so maybe we can ignore the wick. Don't say that very lightly. But you know, maybe you could watch for a break and close here. Yeah, arguably, what do you need to see again? What happens all the time, or what happens that is repeatable that I've found anyway? I don't know if anyone else agrees with this, but when you get that turning point, what does the market tend to do? It makes a higher low, you know, higher high pattern. It's very easy to ignore that because you're at this support point and you might just go, well, it looks like it's breaking out anyway, so why don't I just buy it now, put my stop loss below the low? That's not the point. If this now starts to recreate what the sort of trend is, the daily trend is, then you look to really get involved with the market. So I like this a lot. It's a market that's on my list. It's come back into the daily previous highs. Euro Oz is already breaking higher. So, you know, this could be a market to have a little look at. But Euro Oz, EuroCAD on my watch list this week, and we're just waiting for opportunities. Pound Oz, Pound CAD as well was on the list. I don't know how these markets are performing because, yeah, they were too high. Pound CAD was at this area of resistance up here, which completely put me off being being on board with that. And pound Aussie was also in a very similar sort of place, being at those kind of key swing highs. I mean, that was a great level to have a little look at, maybe something going on there for a pullback, but still an uptrend though. It's just it's not there. Maybe breakouts of that consolidation, you might get a little bit of a move up. But yeah, pound Oz, pound CAD was on the list. I just felt that those markets had moved a fair bit. The other one was Kiwi CAD, but still price remains below. We broke the 50 moving average, which was a good sign for me. But we failed to then make a new high. So we failed to make that sort of second step, which is that. Once we'd made that primary move, break above the highs, I'd have been watching the secondary phase there for a move to the upside, but didn't happen, unfortunately. Maybe price could do something down towards this demand zone instead, if you want to try and be an early sort of buyer of a market. But for me right now, there's no rush. We are in December. December can be poor for trading. There's a lot of, I guess, low volumes during December, so a lot of portfolio managers would be closing the books, I guess, and not being looking at what's going on. So I'll keep an update on sort of the fundamentals, but they'll probably be thinking about how they can reposition going into next year. Hi Ratish, hope you're well. Been fine all day. I start talking and I start doing the stream and my nose just starts streaming. But what have you guys been up to? Let me know in the chat. Is there any markets that you've been trading recently? I think a good market probably would have been the S&P, or looking at your indices, because these are just continuing to tear away to the upside. Let's check out gold, because gold was a market that we like the look of on a breakout move. Looks like it's rejecting these swing highs though at the moment. Again, is the dollar going to start ramping up and moving higher? But this was to be expected. We've got the breakout now, which is fantastic. Seasonal chart suggesting that we'd be a buyer of gold. So yeah, looking for a pullback on this one now, which is nice. So maybe if we get like a couple of slow days here, a rejection of this area of consolidation, then the market might then start pushing back to the upside. So it's about being patient with these markets now. Don't want to give anything back at the end of the year. Silver's not having a great time. Let's have a look at the position on silver. Hedge fund long. Yep. I don't think there's anything there for us then. That gas continued higher. It's still a market that I like. Platinum still moving to the downside. Interesting. So we had a cut signal on platinum on the 22nd of October for a short setup. Market has continued to push lower, probably heading down towards this kind of demand here. You're in that gas? Nice. Quite like these lows in there. It's a nice little move up to the upside. Honestly, I wanted to be a buyer of that. I've kind of held off nat gas because there is a really strong seasonal play. I do put cut over seasonals, and there is a really strong seasonal buy on nat gas at the moment, but I'm wondering if we kind of break these 3.4s, then where's nat gas going to go? Because there's potential for this market to really break to the upside. You know, above the 50 weekly moving average, above the 50 daily moving average. So that to me is still markets are good to be bought up. You know, 4 hour again kind of changed trend, broke back above the 50. So you just got to be careful with markets like natural gas that do tend to be a little bit gappy, but Swiss natural gas COP reports are fairly strong for that market. Right, let's see if there's anything going on here then on our seasonal patterns. There is a couple of seasonal patterns that I really like the look of. Right, let's put in major currencies. Let's see what pops up here. It's going to be New Zealand dollar, Canadian dollar on the 19th of December. Let's go check out this one. Yeah, comms are at an extreme. Yep. Welcome to the live stream. Hope you're doing well. How do I pronounce your name? Is it Pythias or Pythias? Pythias? I hope I pronounced that right. But welcome to the live stream. If you're new, hit that like button. But yeah, we're going to talk a little bit about seasonality. If we look at over 46 years of data here, current year's price has a 77% correlation with 46 years of data. So the next kind of one that we can look at when it comes to seasonals is between the 19th of December and the 4th of January. There is a 73% win rate for this particular pattern. So what that's telling us is that between the 19th of December and the 4th of January, price typically rises. Out of the past 49 years, it's done it 34 times and only hasn't done it on 12 occasions. So that's quite interesting to see. Average return is quite low, 0.6%. Max year has been 4.4%. Max loss has been minus 2.1%. So let's have a look at it in an election year as well, because if we go to election years, we don't really see that much of a strong bounce, and the election year arguably has a stronger correlation with this year's price. So it's got an 85% correlation. So are we really going to see that bounce on CAD this year? Don't know. I think CAD's really under pressure at the moment. Employment figures on Friday weren't great either, last Friday. So yeah, it's going to be an interesting one. 20 years is not showing the pattern there. Let's have a look at an election year. Let's have a look at see how it performed in 2016. So 2016 only had a 0.4% rise. The following year, though, post-election year, did pretty well, 2.3%. So maybe we'll see something. I mean, if we go check out the dollar CAD pricing at the moment, it's not a market that I want to sell right now. I mean, I did want to be a seller of this, but you know, we think about it, price action is not agreeing with us right now. I mean, if it gets anywhere up here though, 143s, even the commitment of trader reports now has just gone away. They've just gone away. They've not even bothered to sort of add into any of their positions. But I know that's obviously a very interesting area for markets right now, because that's that previous high. But look how price is consolidating there. That to me is not a market that is screaming it's going to go lower. You know, usually if you hit a big resistance level and it spikes down, you know, that's a good sign. But since we had that move back here, we haven't really seen much from it. You know. completely changed. Market has just ramped up. But yeah, it was interesting price action yesterday. Had this kind of move down, tried to, you know, again, this is why we always look at the close of play and not look at sort of, you know, pre-close, because if you would have looked at like that, close would have been a lot more telling for what price could do next, rather than it closing back within sort of 50% of its range yesterday. That's why, you know, like the idea of being short CAD yen right now. But look at this little move in here. I want to see that daily close bearish. That daily close is bearish, then you've got more of a chance that price is going to continue to go that way. Hi Precious. Hello John. What seasonal tendencies in play for cable? Let's have a quick look. So we can't actually see pound versus the US dollar. We can see the pound futures though. But yeah, not really anything going on over here. If we look at sort of, pound has not really performed with its seasonal play. I mean, typically through August and to the end of September, pound is usually bearish. That didn't happen. So, I mean, one thing we can do is kind of look at August and be like, August was positive, what typically happens in those years. And, you know, usually we see a top in the beginning of September, price falls and then moves away. That didn't happen either. You know, usually September is still bearish. So if we say if September is positive, what typically happens? Usually if September is positive, the market continues to rally. That's not been the case. Pound has pretty much ignored all of its seasonals this year. So yeah, that's been one to kind of think about. If we look at sort of TruePath and what TruePath is suggesting at the moment, which has a 94% correlation with price, again, kind of just sees that little bit of a bottoming coming in. But, you know, it says 94% correlation there, but I think that's because of sort of how price has reacted over these kind of past couple of months. You know, we expected a low to maybe come in, a low has come in. But it's like everything else at the minute. I don't think the market particularly knows where it wants to go. If we look at how many years that takes into consideration, it takes in a few custom years in. But yeah, just kind of sideways. If you're looking at euro then, and you take a look at the euro, I don't know how it's put on here. Yeah, there we go, Euro FX, there it was. Euro, on the other hand, has a very strong seasonal pattern towards the end of November into December. This is a market pattern that I really like to look at. Again, not really got that kind of strong correlation going on. Even if we go to TruePath and have a little look at a correlation that has a 94%, that buying momentum or the low came in exactly where we kind of expect it to, but not really kicked on from there. The only thing for me with euro right now is the commitment of trader reports. And when I open these up, I'll be interested to see how pricing has changed going into this week, because we're at 100% signal here. But is this the turning point? I thought this was the turning point because you got these kind of weekly lows in here, but it might not be. Price may continue lower. I mean, at the start of the year, I did say potentially euro could be at parity again, and I kind of got, you know, I got laughed at because price was moving higher. But I don't think it will happen for the end of the year, but it could happen into the start of next year. But what will that do to hedge fund positioning? Well, it just means they'll get more short. They'll get even more aggressive on it. Commercials will get even more bullish on it. So as price moves lower, commercials will keep buying. As price moves lower, because hedge funds are trend followers. They'll keep selling price. So it comes to a point where they're at an extreme. They are at an extreme right now. So, typically when they've been at these points in the past, price has reversed. Now, the only kind of one I can see that, we can kind of highlight is this low that formed in 2022, which is these highs as well, which is kind of the extremes we're at now. Price did find a bottom and rally. Problem with it, and I say this all the time, the commitment of traders report is a really bad timing mechanism. When it kind of nails it, but it's a really bad timing mechanism. But you can see when we peaked on contracts, it was the 5th of September, and price didn't really move higher until the 14th of November. So yes, this overall trend was finished, and I guess a lot of people would have still been piling on shorts here, but it still took a good few weeks before price did anything. That was like a 6-7 week move before the market started to change and go in the opposite direction. So that's why, again, you've got to add those kind of conditions filtered into your trades. At the moment, euro, I like the idea of being a buyer, but is it the right market to buy against the US dollar? Probably not. Could we look at weaker markets, one being euro CAD, the other being potentially euro Oz, which has closed above this little bit of an area here now. So this could be a market to watch going in the future for a bit of a move higher. There, something like that. Let's have a little look. How it is just going towards that 50 moving average now. Again, if I'm looking at this market now, where's my stop loss got to be? Well, it's either got to be below this low or that low over there. So now we're breaking higher, great. That's kind of meeting my rules. But if it starts to pull back, then I want it to try and pull back as where it started to kick off the move in the first place, really. So anywhere in there would be ideal for me. But I need to see a close above these highs first. Preferably 2 closes as well. How's old Bitcoin doing? I know Bitcoin went to new highs again. Still going. All right. Right, we've been going for about 54 minutes. My nose is streaming, so I will end this stream. So thank you everybody that joined me again. Really appreciate you all. If you could leave the stream a thumbs up and subscribe. What we're saying, next week's going to be the last 2 streams for the year, and then I'll be back in the new year. So we'll see where everything's going on. It's going to be light volume, so don't expect too much, but we'll go over the currency strength and weakness. We'll try and keep up to date with all the fundamentals that are going on and see what happens. So thanks guys for watching this week. Appreciate you all. I hope you enjoy your weekend, and I'll speak to you soon. Thank you.